a lot of people got very crushed, more than the persona is on Twitter right now. Like, you don't see too many people talking about it. There wasn't, I think, enough horror stories on Twitter to really scare people from these moves. These moves are very scary. I know us three, like we were down because we, like Kyle was saying, we mistimed it. And I think that happened with a lot of people, and a lot of people I think are just ignoring it or not talking about it. So it's just something to really watch out for on the NASDAQ listed side, small cap side, is how dangerous some of these runners can be. And it was a good reminder for a lot of people just to take it easy if you are going to start trading NASDAQs, because you don't want to get stubborn on any of these, because they can really cause a serious amount of damage.
What is up, guys? Welcome back to Twist. Your favorite hosts are here. This episode will be, I think, pretty packed. I don't think it'll be long, but like Sector Momo was back. We got another sector. Just when you think you have seen all the different types of sectors, there's a new type with Trump and his media company. So we'll go in detail on that. But of course, let's start it off as we usually do. Mari, Jack, what are you seeing? What are you feeling about this newer market? Clearly way hotter, but how do you think it's been different from the beginning of October to maybe the end, and what it may lead to, in November, December-ish?
I love it. I think it's great. It's a lot better than it was just like a few weeks ago. Obviously, there's still like a part of me that needs to adapt into the small cap market. Feeling like a little mixed emotions like the past few days, just because there was so much opportunity and I thought I did great, but there were also like a few like mistakes between like some of these big runners. So I mean, it's great, it's amazing, and I feel like there will be a lot more going into December and January and all of that, and just getting a feel for the new market and all of these big runners.
Yeah. So it's definitely been pretty small cap focused on the NASDAQ side. The OTC, I think, has been even slower than usual, because I think a lot of OTC traders are migrating into the small caps. Just from a few days ago, I think that a lot of OT stocks were red, and I think a lot of crypto was also red. So I think a lot of that had to do with people just selling their stocks just to buy these NASDAQ stocks, because that's what's been hot. And unfortunately, we haven't seen too much in the OTCs, but that's okay, because there's still plenty of winter. Hasn't even really become winter yet. So there's still plenty of winter time to heat up the OTCs, and that's where we'd really probably find our stride. But we're still doing very well in the NASDAQ market. It's just a little bit harder and less predictable, personally, for me.
Yeah, totally. It's funny what you said, Mari, about you can do so well, but when there's so much opportunity, there's like, I don't know if it's FOMO for me. But I mean, so we'll get into it in a couple minutes, but like PHUN was my new biggest trade. So in terms of performance, like I can't complain. Like I've done in terms of P&L better. But right, in terms of how much opportunity has been in this market, which is like such a great problem to have. It's like almost like if you follow me on Twitter, I talked about how like disgusting PHUN was and DWAC was, because it's like, to me, it's like disgusting in like a good way. Like it's like you can make this much money, like this much opportunity is available to you if you're like prepared and have the capital to like risk. Because I did great, but then I'm thinking about like, wow, this is what's possible. And then you feel small again. Like I did so much better than 99% of traders, but then you keep seeing like the limits that can be made. And it's like, wow, I've got more work to do. And that's such a dangerous game to play. And so I say this so you guys can learn it, and that I can continue to prevent myself from falling into that trap of that. There's like always someone who's going to be bigger and makes more money than you. Always. It's like, it's never a game of comparison. It's always should be a game of comparison against yourself, which is why I'm happy with how I traded, because I have improved. I have made more money enlisted these past couple of days than I have in a very long time. Especially in terms of last sector momos that we've seen, or sector momentum that we've seen from listed stocks. It's just something you have to be aware of. Like when this happens, you truly can see how much money any one trade or trader can make, given the liquidity, given the opportunity, given the volatility. And it's like the word that keeps popping in my head is disgusting. Like it's insane. So let's get into it. Let's talk about some of these trades that just are absolutely nuts. So I guess I'll start off with like what the hell was this sector? Started with DWAC, DWAC, which, if you haven't been following like the political background of America, obviously most of our listeners are American, but obviously some are not. Trump got banned from Twitter. I believe he got banned from Instagram and Facebook. He just got kind of wiped off the social media platform that exists. And so essentially what happened was, I think he just came out and said, I'm going to make a social media platform, a conservative based social media platform, because he's a Republican / conservative. I'm going to make a social media based on that, so I can have my own platform to speak, because all the other ones have kind of essentially banned me. And he came out and said, I'm going to have this social media company and I'm going to take it public like right away, essentially what he was saying. And we're going to do it through this SPAC, like literally gave the ticker of the SPAC, which is DWAC. And it's almost like this was kind of a reminder of how, whether you like him or hate him, the power that Trump's brand has to his name, where he came out saying, I'm going to take this company public, and chose this SPAC. And I mean, this thing just skyrocketed. Went from $10, which all SPACs started around $10. And it was at 170 in less than 8 hours later, a day and a half, not even a day and a half. So, and that's really what ignited a lot of runners, just based on, and then so with sector momentum, if you have, for listeners who don't know what sector momentum is, it's when like some kind of idea, some kind of sector, some kind of theme gets super hot, and it gets so hot that a company doesn't even have to be legitimately with that theme. As long as they're just tied to it in some way, shape, or form, they can run. They don't need news. They don't need a catalyst. They don't need any fundamental reason to be going up. If they're just tied to that theme, they will run. So DWAC was the start of any Trump-based theme. And so like GBHL, or PHUN, even MARK, which we could potentially go over. All of them, kind of the theme was tied to Trump. Like if somehow the CEO knew Trump, or Trump knew the CEO, any way you could tie the company together to Trump, like that was the sector. And so you see, like I said, it went from $10, and by the next morning it parabolic all the way up to 170. So Mari, Jack, I'll let you guys jump into your trades first if you guys want to go over them. But like that's the premise here of why all these were running, why it was so insane, and why it opened the door for so much opportunity to make money, essentially.
So PHUN was definitely my main watch. I had taken a couple trades on DWAC on the first green day on the short side. And as you can see from the candle on the left side, Kyle, the first green day.
Oh, here.
So I took a couple of short trades on that, thinking that it would pull back because it was up so much. And it did end up pulling back a little bit, but it was very, very strong for the most part. And I ended up not really liking how it traded. It skipped dollars a share at a time, and it was kind of hard to trust too much size on it. So PHUN was kind of my main focus, considering that it was up on more fluffy news. They ended up releasing, why was it up, Kyle?
I don't remember looking at it too closely. It was like they were tied
an app with Trump or something.
Yeah, just they were on board with the app or the platform, and they got going. Yeah, they just started running.
Yeah, so this started at $1 and it had a 70 mil float. So I was a lot more convicted to take this one on the short side. And I didn't take the long, which would have been amazing. But I did end up shorting it into the parabolic. And I was down on my position. Obviously, it went from 7 to 24, which is a big, big move. I ended up getting around a 15, 16 average on it. And it ended up topping out at 24 and tanking. And I covered my shares in the $9 area, and then went long for the bounce, and then shorted the bounce. And that was basically the main trade on it. I scalped it for the rest of the day, but it ended up being my second best trade ever. And I was down a good deal at 15 or 16, but something that not like small accounts can't take this trade because you just don't have the capital to risk it. But if you are sizing in appropriately and you have the correct plan, if you know that this stock would have to go 1,000% from my entry where it's already up 15x, then you can make a plan based on that. And it's, you know, stocks aren't going to go straight up forever. It's going to pull back eventually. So if you just make sure you're getting out on the dip, and I thought it would dip pretty significantly considering that everything was getting super euphoric. So I didn't time it perfectly. And if I did time it better, if I had like a 20 average, it would have been double the size trade. Because I made like $6 or $7 a share, $5, $6, $7 a share. If I had it from 20 or in the 20s, I would have made double, which would have been really cool, but just mistimed it a little bit. We'll try to do better next time on that. And DWAC, I didn't end up getting too much size off on that one because, like I said, that first green day kind of scared me to trade it with size, but I did get like a 140 average on that one, 135, 140 average, and I covered as low as down to 80, but I didn't have much size. And then like the same thing, bought the dip, bought the midday dip around the 70s and sold that into the 90s. That was a really nice trade. And then GBHL was the funnest trade. It was the first trade that I took on the sector. I put some orders in at the open because I saw that it was gapping up with Trump related news. So I filled like 13 million shares at 6.4, which was the dead bottom. And it spiked straight up to a penny. And I ended up taking my shares off around 0.009 because I blinked and I was up like 35 grand. And how this month was going, I wasn't, you know, I almost doubled my month just with that trade. So I was like, wow. And then after I traded PHUN and DWAC, then I remembered how you can make the majority of your money on the good A+ setups. On these other setups that we're wasting our time on when it's slower, you just can't make the same amount, or it's still fine to trade. But if you're expecting to make a lot with an average setup, you're just going to burn yourself out. So after I took GBHL, I kind of knew that, you know, this is going to be a big day.
Yeah, totally. Go ahead, Mari, if you want to.
I'll talk a little bit about my trades too. So PHUN, it was the top watch that I had for Friday, and it was actually one of my top 3 trades that I've done. And yeah, like I was stuck in like a few halts during that, the first few minutes at the market open. Like I do kind of want to highlight the importance of having the right entry, because when you have like so much conviction that it is going to pull back, suddenly like you may be oversized, or you may like the stock is just up so much, like it can still do the impossible. And if there is enough hype behind it, there is enough buying power and a lot of shorts to squeeze. So these like it just gives you less reaction time if you don't time it perfectly. But this kind of just reminds me of CYDY June 30th when I was dip buying it, and I was very early on it, but it just shows the opportunity, and then it just bounced so much. So same as this one, it can have, if you time it correctly and if you're more prepared, there's just so much opportunity that you can get out of it that it makes me just want to do better for the next time, because there will be a next time. And this is just kind of like one of the main tickers that we've had the past like 4 months or so, but there is going to be more, and being prepared for it is important. But we learn from these examples, and we learn from being early, because you learn from the mistakes that you make.
Totally. PHUN was your only main one, or did you ever take GBHL, Mari, or no?
I never took GBHL. I took DWAC, but I wasn't really focused on it. It was on the Friday that I traded PHUN too, and it was a lot smaller size because I was mainly focused on PHUN, but it was also another one with great opportunity. And I also like the way that it bounced near high day and then it stuffed again, so it gave a better entry than PHUN did, because PHUN just immediately at the unhaul, it just gave back all of it and then unhalted to the downside. But DWAC actually gave that perfect entry where it just stuffed at high day, and then you could have just taken an easier entry there for the unhaul.
Yeah, totally. In my case, very similar to both you guys. GBHL totally missed it. And I saw it gathering up. I immediately recognized that like people saw it tied to this Trump mania and news. And I remember telling myself like, I should be buying this out the open. Like, this is how I've seen this. And I just didn't. I was almost like, I wouldn't say I was scared, but I just from seeing how much PHUN was up, seeing how much DWAC was up, almost didn't. The parabolics were a possibility in my head. Like that was like, this could have like parabolics out the open. I just thought if they didn't, like the whole sector would have gotten crushed, right? And so, and usually when you see a bunch of sympathies start to come with a sector, it's usually the sign, it's like the beginning of the end, right? And so when I see like this really cheapy sub-penny OTC join the sector, I'm like, I started getting 250-50. I was like, oh, this is the sign of the end, and not realizing that there's still a time slot before the end. You know what I mean? So I totally missed GBHL. Did not really take part. I remember trying to dip buying here, but then just immediately selling it, realizing like I'm just chasing. Like this is still way too much. What Jack did was the best play. I mean, really just taking it right out of the open. I mean, 100% spike in the first like 4 minutes. I mean, it's insane. So. And then another 300% and 215 minutes later. So that was really cool to see. Good lesson learned for me next time. But PHUN was my biggest winner of the three, and very similar to Jack and Mari, where entry is so key. And the biggest mistake I made here was that thinking that just a starter wouldn't hurt. But the reality is it completely changed how I approached the trade. So like I said, pre-market, I had a feeling like, okay, either these are going to just collapse right out of the open, or they're going to go parabolic, or they're going to kind of, I had three scenarios. It was like collapse, parabolic, or like kind of chop around for an hour or two and then pick a direction from there. And so when we start spiking, I'm like, okay, parabolic. Like I've traded this before. It's kind of like an opposite dip buy, except it's definitely more riskier. It's not for beginning traders. I mean, and I guess to go off on a little tangent on that before I even go through parabolics or into this trade, parabolics in general, right, are not for beginners by any means. I didn't start even testing parabolics with small size until 3.5 years in or so. And it hasn't really been until the last year or two since then that I've actually taken bigger size on it to actually have it like really be a part of my strategy and setups. Just because for the reason of like, you see these runs for this, like PHUN is a perfect example of why it's not for beginners. Like Jack said, like you kind of need more capital than a beginner, because if you're a beginner and you don't have enough capital, like this is how people blow up. This is how people get margin called. This is how people lose their account if you don't have enough money. Or if you're just missizing yourself, like if you just oversize, it really doesn't matter how much money you have. If if you have a $10 million account, but you go in more than half or more of your account and you're getting down 100% or 200%, you wiped out, so not for beginners by any means. And so back to my trade on this, I took a starter at like just below 12, the high 11s. And you see in hindsight, like, wow, Kyle, that was really stupid. Like, believe me, I know. I am very well aware. And what's so silly is that to my mind, it was just a starter. I was like, oh, it's just a starter. And if you've watched, I forget where Tani talked about this, but he did it with Dries. With Dries, when Dries went from 5 to 115, he like took a starter at like 15 or 20. He's like, I'm just gonna hold on to it, And he ended up losing like 100 grand because it just kept going and it kept going and it kept going. So for me, when I took the starter, I was like, you're an idiot, Kyle. Like that was the worst. Not beating myself up, but I was like, that was the biggest mistake I could have made. So because what it was just a starter turned it into like me not being able to really add, right? Luckily, I timed my second ad pretty well. I got it in the, I believe, 19 or 20 area, either right after this halt or right into this halt. But like Jack said, I love what Jack said about having enough capital. There's two ways to manage your risk in these scenarios. One being the most ideal way to manage your risk is just timing it very well, right? Really waiting, and which I would have loved to do. If I just didn't have this starter, it would have been this scenario. I would have waited till this last halt up, would have gotten short in the 20s, halted down, and then my risk is now 24. Like it's again opposite dip buy. So once the turn happens, your risk needs to be that top, just like the dip buy. Once the turn happens, your risk needs to be that low. And so that's exactly what happened. Once this halted down, now I knew if we broke over 24, I'm cutting it. No questions asked. We're done. We're out. However, like I said, because I started in way too early, what I thought was just a starter turned into too much dollar size, where I now knew that scenario of me timing it well was no longer an option, which is really frustrating. Again, looking back, I'm like, it still eggs at me because I know I could do better. And I've traded enough parabolics to time them well, and I just didn't do it here. So the second scenario is, if you mistime them well, how much dollar size do you have in the stock versus your account, right? So, like the example I said before, if you're shorting a parabolic and you go in half your account, that's people always have the stigma of going all in is a bad idea. Even going half in is kind of a bad idea, especially on things like this. Because if you go half in, say if I was that newbie of a trader, that risk management, like such lack of risk management, and I went half in at 11 or 12, yeah, at 24, I'm down 100%. Like that opens the door, the massive door to blowing up and getting margin called and literally losing your account. I have never been close to that scenario, and I never will be, for the reason of my backup. This second scenario, which I'm referring to, which is like a backup risk management, is that even if you mistime it, going in small enough with a certain dollar size of your account, you would need the biggest of squeezes. Like based on how much money I had in this PHUN would have had to go to probably 150. Given that I even don't cut it, given that I get that stubborn that it breaks 24, and after this haul down, it breaks 24 and it keeps going, and I get that stubborn, which I've rarely, there's only one time I've gotten that stubborn, and it was in MMM NFF, which I made a YouTube video on that. You can go watch that, about that dip buy. But essentially you get the point here, which is the second scenario is, as long as you're in a small enough dollar position size of your account, your risk of blow up or margin called is very incredibly small, if not close to zero. Now doesn't say that's not a possibility. And if it kept going and I was that stubborn, then I get what I deserve. I absolutely would have gotten what I deserve. There's no denying that. It just is upsetting that I had to resort to that, because that's like the backup of the backup, right? That's not the goal. My goal isn't to just take a position size to where I can just hold through any squeeze and profit, right? The goal for the parabolic short here is to time it well. Unfortunately, like I said, just what I thought was a small starter that didn't matter, it crushed me from like what Jack said, making practically double. Like again, even screwing up with a starter, I still made my biggest trade out, especially after reshoring this bounce and then covering into this panic. But if I just timed it well with the first scenario, like the first way of managing risk, which is just waiting well and waiting for the first haul down to get short, yeah, this would have been like a $250,000 trade for me, easily. It wasn't, so it's a good lesson, good learn. I'm glad to be green on the trade regardless. It could have been way worse, like I said. No one is immune to these kind of squeezes, no matter how great of a trader you think someone is. And again, like I said, like the moral of the story is like that starter for me just killed me from being the safest scenario. So yeah, DWAC, and in comparison, DWAC was way better for me, way better. I took a starter, same idea, into this first minute open, but it was so much smaller of a starter. It was so much tinier in terms of dollar size that I was able to add on this stuff when it finally actually started halting down. And I had a way better average. I had an average in like the 150s, way better risk reward. Not nearly having to risk it was more like scenario one. I put myself in scenario one to time it very well versus scenario two to have to just be a certain dollar position to not, to override a squeeze. And I made less because of it. So it's I made less on DWAC because I was safer, made more on PHUN because I was a little bit more aggressive than I would have wanted to be, again, given to that starter. But either way, I came out green. So that's all I really asked for. Live to find another day, lesson learned, don't want to really put myself in the position. And honestly, I don't know what you guys think, if you guys want to add on to this, but I almost rather miss it than put myself in that second scenario. Yes, like I said, we're putting in, it's only a certain dollar size of my account to where the risk of ruin is very, 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 very small, but it's not zero, so going forward, I would almost rather miss it than put myself in that position, or at least continue just to manage my risk in that way to where I can just play it safe. Because so many people don't like literally, like no one talks about it. No one's going to mention it unless they're super transparent. But these squeezes blew some people out of the water, 100%. Like these squeezes, some people took some massive losses on these squeezes. And you just don't hear about it because what do you do when you do that? Like you kind of, some people just enter like this realm of like depression. So other than that, I mean, same thing with PHUN. I reshorted the bounce on PHUN, reshorted the bounce on DWAC, covered into this pull mid or late morning. Today I reshorted them for the not first red day, but more the second red day technically. Covered way too early. I ended up covering all of my DWAC at like 77, being short from like 87. So I made $10 a share, but left $20 a share on the table. PHUN today, same idea. I got short pre-market, covered it all like by $6. Watch it drop another $1.50 a share. So again, making money is a great problem to have. Leaving money on the table is a great problem to have. But I definitely underestimated how far these can go today. And today was just an absolute bloodbath. So yeah, I don't know if you guys have any comments to add, but just amazing opportunity and amazing lessons to be taken for the next time we see these come around. Okay, so to close it out, so this particular scenario reminds me back in 2019. So I think it was Mari or Jack, you said a lot of the OTCs are slower and a lot of the OTC traders are kind of pushing themselves to NASDAQ. And I've seen that trend too. I've had a few traders reach out to me like struggling with OTCs and they want to know how do they adapt. And, and I've been there in 2019 where the OTCs were so slow that I had to adapt. I had to learn listed more seriously. And it really, and it was around the same time. It was around September, October 2019, where OTCs were dead, listed started getting hot. And it was just like this. It was like PHUN, it was like DWAC. Two like huge low float runners just went rampant. Like one went from like 5 to 30, the other went from like 4 to like 17. Whatever the case was, it was two listed runners that really brought the market back to life. Very similar to how DWAC and PHUN just did it for us here. And I missed those runners completely. I wasn't prepared. I wasn't experienced enough with listed stocks. And I totally missed them. But that like really pushed me to realize I need to get in this game and I need to learn the listed market because this will happen again. So it's very funny to like see this. It's so eerily similar. So for newer traders who are like, have maybe missed these moves completely and are now learning listed, like please continue to do so because these runners coming back and into this market has really brought like a lot of momentum back. And again, like Jack said, we haven't even hit like winter trading, which is like the peak of all markets for season in terms of seasonality. That's when hopefully OTCs and listed will both be going off tremendously. Right now it's just listed, but I just can't express enough to like use this as a time to continue to learn and eventually dabble, if not make the listed market part of your strategy. Because that's what I did. And then 2 years later, from 2019 to now, that's why I can make my new best trade or, make pretty much $250,000 in the last 3 days of trading these things. Because I took that seriously 2 years ago to learn these listed runners. So I don't know what you guys think about that, but I'm really grateful to go back. If I can go back in time and tell Kyle like what to do, 2019 Kyle's like, you're doing it right. Do that. Like, please do that. So I'm happy about that.
I also feel like me thinking of like Mari a year ago, I wouldn't have taken these trades. So even though, yes, there is a lot of people that are doing really good. And I feel like we did the best that we could with the knowledge that we have. Also, like, don't feel bad if you didn't execute it this time or if you missed it or just in general, the whole opportunity. It's also a little bit dangerous because there is a lot of these short squeezes and it's also just, it serves as an example for us to learn from it, but there is no good volume in OTC anyways. So the follow through isn't that good. And I feel like I'm not really missing out on a lot of trades. If it wasn't for PHUN and DWAC and BKKT, I feel like I wouldn't have taken a day trade in the first place. So I do feel like I would want a lot more OTCs going into next month and going into the winter. And that's what I'm looking forward the most. But adapting is very important, and adapting to this market is also what I've been trying to do for like the past 3 days or so. But there's a lot more to learn. And I feel like I haven't learned the most that I can. So every day is just continuing experiences. And whether you lose or you gain, you're still going to be better next time it comes around.
I love that. Yep.
Yeah, I would just say the main point for me is just watch out for the danger in these NASDAQs, especially if you're a short seller, because DWAC and PHUN, they went up 20 times, even more than that on PHUN. Mark went up 10 times. And I think that a lot of people got very crushed, more than the persona is on Twitter right now. Like, you don't see too many people talking about it. You saw some people say that they had losses and stuff, but there wasn't, I think, enough horror stories on Twitter to really scare people from these moves. These moves are very scary. I know us three, like we were down because we, like Kyle was saying, we mistimed it. And I think that happened with a lot of people, and a lot of people, I think, are just ignoring it or not talking about it. So it's just something to really watch out for on the NASDAQ listed side, small cap side, is how dangerous some of these runners can be. And it was a good reminder for a lot of people just to take it easy. If you are going to start trading NASDAQs, or if you're going to start learning them, just go easy, because you don't want to get stubborn on any of these, because they can really cause a serious amount of damage to your account if they're mistimed with a wrong plan. So I'm reminding myself, reminding Kyle, Mari, like, we got to take it easy on these, because they are very dangerous. We need to do better patience and better timing moving forward.
I like that. Just to nail that point on the head, like, realize what just happened there. If you're listening, like Jack Kellogg, like nearly $9 million in profits, just told you to, not only told himself, but told us, like, we should be reminded to slow down. So if you're listening to, like, if you're just starting to learn listed stocks, like, just like, let that sink in what that means for you. And I say that because I've seen so many newer traders feel like they have to get started right now. And they have to start making money right now, and they have to make it happen right now. And this ties into what I said earlier of, like, I didn't make any money on those runners back in 2019. Like I said, they were all just learning experiences. I made $0. Okay. And then even after that, I just tinkered and tested for 6 months. Then COVID hit, and then I really started picking up because I really started getting good at it. But like, just please, do not go into listed trying to take the same size that you were taking in OTC. If you're like a profitable, or at least are comfortable with OTCs, do not go into listed taking that same size, right? It's a new setup. It's a new market. Please take it slow. It's always going to be there. Again, like I said, 2 years later, I've now been able to make some of my new biggest trades, all because I took it slow and I learned it the right way 2 years prior in 2019. So I think that hopefully he nails it on the head. Again, at least we're all, we're talking about these trades and having these kind of days in the breakouts and breakdowns chat room. A lot of people like had it was funny when we were all making these trades. The chat room was kind of getting excited because it's just fun to watch and see. We got a lot of good people saying, like, they learned a lot, which is really all we can ask for. So yeah, more than welcome. Check it out. There'll be some links in the bio. Like and subscribe to Twist and StocksToTrade YouTube channel. And we will see you guys next time. Later, guys.
I hope you guys enjoyed that video. Thanks so much for watching and being part of the StocksToTrade community. We wouldn't be here without you guys. Make sure you hit that like button and subscribe to the channel if you have not already. Our goal is to hit 100,000 subscribers by the end of the year, but we can't do it without you guys. So if you like what we're doing here and you want to hear more, please hit that subscribe button, and I'll see you guys on the next video.